Alright, good evening. It is Tuesday, December 12th, 2023, and tonight I'm going to show some more advanced trading techniques. I usually show three different windows, and tonight I'm going to just show two, and I'm going to share a couple things that I'm not going to go over most nights. I'm going to usually go back to my the pivots windows that I've been showing because I think it's simpler for people. But there are some really cool things that I have that these are the actual windows that I trade off of. So I do want to share this a little bit. But up first, I'm going to go dive in. By the way, this is precisealgorithmtrading.com, and yeah, this is our daily review. So I'm going to jump in first to our automated trading systems. This is the Dow futures. These trading systems trade automatically, and they're algorithm trading systems. So it's a bunch of functions of if this happens, then this, and if that happens, then that, and it buys and sells. It goes in both directions, and this is the net results on an equity curve. So this is literally since 6/11 of 23 till 12/12 of 23, going from an equity of wherever you start with, and it's plus this $80,000 mark right here, which has been on a drawdown lately. So and on the weekends I go ahead and move this out so it's showing more than a year's worth of data, so you can see that. I mean, really, the algorithm's based on the longer term time frame. Even though these are 1,000 ticks, I'm sorry, this is 1 minute. So these are 1 minute trades. They're based off 1 minute bars. And anyways, the net result here is for today on 12/12 are these two trades. So we've had a little bit of a losing streak lately, which is normal in trading. And what we need to do is come up back out of that. So a little bit of a bounce here, and it'd be nice if it would just keep going higher at roughly that 45 to 60 degree angle, depending on which one of these angles we're looking at. So this is our Russell 2000, and again, I've been working on this one. This is really not ready for prime time yet, but it's close. I just don't like these drawdowns, and I got to get some time to work on those. But this one actually, what did it do today? It's also been on a drawdown lately, and on 12/12, it also had two trades. So a little bit of a bounce for today. And by the way, these are both, double check this, but I think all these trading systems are based on three contracts. So they're reducing some of my commissions by making three contracts instead of the previous. The Russell was built on 9 contracts, and anyways, these are manageable, and they're very similar math behind them. The Nasdaq here um, also, this is actually based on 1,000 ticks, which a tick is a trade. Each individual transaction, you put together 1,000 of them. That's what makes the bars, and there's arguably some volume based on that because it's the total amount of ticks in a bar, and then you put the bars together, and it's kind of got volume built in. So, and they're also fast trades. Um, so we look at today's trading in 12/12, and we had one trade and it was a winner, and we have had a little bit of a streak of losers lately. So again, what we need to do is come back up out of this and maintain this upward sloping trend of our equity curve. So, all right, I'll put that away, and then we'll go talk about some new stuff, which really isn't all that new. It's building on everything else that we know, but um, I'm actually going to ignore this. This is something, it's a trailing stop, and it's a system in and of itself, and frankly, all I'm doing is using it to see what the general market is, but so I'm going to ignore that. That's that highlighted piece that it's kind of in red and blue or red and aqua. And we're just going to look at the bars. The bars are green here and then they're red when they're coming down. That's based on this bottom indicator down here, which is the Weiss wave histogram. And actually, if you go out, this is available out on the internet for free, and I don't know even where I found it, but and there's an awful lot of argument against this Weiss wave because it's based on a zigzag trading system, and zigzags do change when, like, if the zigzag pattern goes too far in another direction, it'll actually change and alter your results. However, I think if you apply a lot of the other things that we apply, then this can be really powerful and sure keep you on the right side of a trade. That said, that's not actually even what I think is more exciting is these, and I've shared this before, that green arrow right there on the daily chart or on the hourly chart, which is right there. That is a break above this 30 period simple moving average. So I've literally got the green and red simple moving average that changes when it turns from red to green and green to red again. So it's kind of an indication of trend. But what you need to kind of look at here is that when it comes up through and closes above that 30 period moving average, it puts a green arrow on there. Well, if the 30 period moving average is still like screaming to the downside, which there's no good example on this chart particularly. I'm going to flip it over to the S&P and see if it's just the regular S&P chart. It's interesting because the Weiss wave goes away because it's based on volume. So I'm going to put spiders in here just because it's got volume. And the SPX doesn't have volume behind it. So if we look here, we were transitioning from red to green, and that's really what matters. It wasn't like totally falling off a cliff anymore, and it started to transition. Well, like here, where we got a green arrow up, you could argue that it's not trending back up again, but it's not like falling off a cliff either. So in this particular case, that you could say that would have been a trade. And when it does do that, you literally let it go until it crosses back again. When it crosses back again, which has happened 3 or 4 days later, which every trading system has its flaws. As soon as it crosses back again, I've got these pivots drawn on my charts that are automatically generated. As soon as that falls back below, you count 2 pivots back. In this case, I think this pivot and that pivot are close enough to call it, and this is a real pivot, and you can see that on a chart. You put your stop right here. And if you set your stop there, and then you just hold and you lose on this particular trade. However, if we go back in time, there's a nice buy, here's a nice buy that did turn green. That one was green. If you're buying on these, basically when this 30 period moving average is rising or flat or transitioning, then this system will work most of the time. And so it's transitioning. It's not, it was obviously coming up, price was coming up. We broke up through, closed. You buy your position at that point, and you don't close it unless you don't set a stop. You could go ahead and set a stop 2 pivots back at this low, but when this comes back below that 30 period moving average, that's when you really have to make sure your stop's in place, and you go back 2 pivots. That pivot wouldn't have actually shown up on that candle at that time because it wasn't defined as a pivot yet. A pivot is a lower bar followed with a higher bar on the left hand side and a higher bar on the right hand side. In fact, the way I have it drawn is with 2 higher bars and 2 lower bars. So it's a 5-bar pattern. Um, Anyways, you would set your stop down here, and then you just hold. And in this case, it fell back through again, but your stop's down here. And you just keep going, and it pops back in again, and you're all good. Comes back out. Your stop, actually, at that point, you could move your stop, I believe. It falls out here. You set your stop 2 pivots back, except this pivot's higher than this one, so you don't use that one. You go to this one, but that's no longer this one. You adjust your pivot up, and then this thing climbs back up again through it, comes up, and it's basically off to the races. You get a close here below. You set 2 pivots back. This is one, that's your stop, and you've collected. At that point, you've guaranteed yourself that much profit. In this case, I don't believe when it came down through and then popped back up and came back through again. That would be 1. That would be 2. The price actually didn't even come down to that stop and stop it out. By the way, you don't put it at the bottom of that candle. You put it, you go a little bit below it. Whatever you think a little bit is, a nickel or a dime, whatever your risk tolerance will afford. This one didn't even come down through it, and then it comes back up through. At this point, you could make an argument that you'd want to get out just because it came down hard, it didn't stop you out, came back up through, put in a buy signal, and now the red line is trending lower. So at some point, you just got to make some call like, all right, I made enough profit, I'm out. You could actually sell when you get at a top, any one of these tops, and just take some profit. So I'm a big believer in taking profit along the way. And that's not all. So I also have a zigzag drawn in here. This is an automated trading system that it's an automated tool, I should say, and it shows these basically when we have tops and bottoms. And you can see right now it's still drawing to find the next top. This is just the S&P, by the way. But it also, something that from the previous high to low, it goes in and automatically draws a 50% line and dashes it. So in a lot of cases, in this case particularly, we were in a downtrend, and this is a lot to take in, but let's see if I can make this thing go down. We were in a downtrend, 1 down, 2 up, 3 down, 4 up, 5 down. So that is 1, 2, 3 moves to lower, and then when we came up, you'll notice this when I highlight that zigzag, the price came up through and past this previous pivot. So we changed from a downtrend to an uptrend, and that was it right there. And this tool helps me particularly see that when I'm not staring at charts all day. I can just pop it up, look at it, and go, okay, well, that's great, we're moving higher. And then normally when you get up into this zone and it's been here for a few days or a few bars, you'll get a top and it'll pull back, and it'll typically pull back to the middle point of the previous swing. Now in this case it didn't, but there are plenty of times. This thing only draws the last few, but you can literally go back in time, and this zigzag isn't even perfect, but you can go in time and you can see when these things actually turn either at this line. Sometimes they obviously go through it. That came up through that line. It's a great place to start looking for a potential trade, is my point, because the big banks, the big money in the market, will push to at least the midpoint, back to the midpoint of these moves, so they can get a better price and they can get in on a new trend. So actually what we're looking for now is for spiders to, at some point up here, which could be the 1272 extension, come back to the middle of this price range, this last move higher, come back to the middle, probably undercut it a little bit, and then take off again. That was the big thing I wanted to show. It also works on an hourly chart. Um, when the zigzag or the price moves, basically changes in trend, which I won't even show it there, but when, how about these zigzags? When the price comes up, doesn't quite meet the previous high, falls back down again, well, and then it takes off. Better place is probably this one, where it came up, came and broke the previous high. It kind of set that in and said, well, I'm still in a defined uptrend. When this pulled back here, this pivot and the previous pivot stayed intact. This came back, but it didn't take out that pivot because we'd already broken that to the high. So we had a high, a low, a higher low, a lower high, an equal low, and then we took off to make a higher high and stayed in trend. And this tool helps me do that. So I just wanted to show that to people. You don't need the tool, you can just do that with price action. But in any case, it helps me understand how prices move and where higher highs and higher lows really come into play in a moving trend. So I hope that helps. You can see we had a trend change here, and now that's why I'm waiting for a pullback into that zone. And it can even get pulled back all the way in deeper and still not take out this pivot, and we can still take off from there, and you'd still have a higher high and a higher low. I hope that makes sense, and I hope it helps. I'm going to flip over and keep going. So the S&P continued to go higher today, and so it's up 0.46%. The Dow continued to go higher today, and it's up 0.48%. You know, some of these other lines that I have in here are really just for reference. So this is a 15 period moving average, and that's exponential. And the reason being is that the 15 period helps me understand where the 30 is and how bullish we are, and it shows that the trend is actually starting to move higher, even though this one was just dishing out at that point, even though it did turn green. So just kind of keep your eye on all those moving parts, and you can kind of see they fall in line with my MACD Momo and my EMAs that are here in the middle. And again, it all plays out the same way on an hourly chart, which unfolds into a daily chart. And then the other part is, you can tell right now we're in an uptrend. We came from up out of a and then into a sideways trend. We've been going higher now. This was a downtrend, and now we're up. So I don't want to say we don't need the weekly chart for reference, but we can certainly tell what the overall major trend is here. Higher, lower, higher, lower, higher. This is actually, in some context, whether it's weekly or higher, whatever time frame higher, this is a higher low than that was, and all these are just noise along the way, just like they would be. They're just bars, and they would consolidate into bigger bars. All right, let's keep going. That's the Dow, the Russell. Okay, let's look at IWM because it's got this doesn't have volume tied to it. So the Russell, same thing. This is one of those situations where you gap higher, and when this one gapped higher, that would have been, you'd have been jumping in front of, this trend is moving lower. The 30 period moving average is moving lower, and I'm not saying it wouldn't have worked out, because it would have. You could have literally set your pivot down here and it would have made it. But this is the better one when this gap's higher, and then you could actually wait for a pullback, and you can see where it pulls back. And these yellow lines are those 50% levels for each one of these previous pivots, or previous moves, I guess, swings. That's what I'm going to call them. So in any case, so this is the IWM, and it went up. I'm sorry, no, it lost 0.1% today. So it's walking sideways up here. And on the hourly chart over here, you can see when the trends, this is a lower low after these zigzags. However, it didn't take out the previous zone down here, so it can stay like, basically it can stay like that, and it's still a higher low. So that's kind of the point here. I'm trying to help you understand that this pivot would have to come all the way down and take out all these pivots for it to be a new lower low. Alright, that was the IWM, or the Russell. NASDAQ, which is going to be the Qs. So the NASDAQ's going higher. Same story, just ripping higher. The other thing I like to do is start a trade based off the hourly, let it turn into a daily, and then when I start really getting into profits, start pulling my stops up based on the hourly, and that protects my profits. So you don't have to do that. You can keep it on the daily, but you know, it can contain some risk. And when the market does really start to turn, you'll collect those or keep those profits, and all you do is get out of the position because it takes out your stops. Otherwise, you have to take a lot more heat. Because let's go back. Situations like this where we broke higher and then we walked higher, but we came up and back and up and back, and eventually came down and came back up again. Right here, you'd set your stop 2 bars back, and you would get taken out. And there are times you can look at some of these markets, and like this one, I think this one actually played out where this, you could have gone from a zone down in here, this wouldn't have taken you out, and you could keep going if you just kept it all on the daily time frame, all the way up to here, and then get out there. So it all depends on the time frame you're playing, and you know, I suggest a little bit of do a deep dive of your own to figure out which one of those makes you most comfortable. This would work also on a 15-minute chart, or a half-hour chart, or a 4-hour chart. So, or a weekly or a monthly. That was the NASDAQ. IYT. So this is a transports. Looks an awful lot like the Dow Industrials. Didn't go as high. It hasn't taken out its 52-week high, which is up here. Alright, and oil. What's oil doing? It went lower. So this is a situation where see, if you follow what I'm saying, this is the red line going down, and it's sloping even harder now. There's no reason to get bullish in that. There was back here, and there was here, although it was a short time trade. It worked back here. None of these trades really would have, I mean, maybe that one would have tripped my trigger, and that one actually would have worked out. You could have got in here, suffered some pullback. This would have been your stop, and you could have taken some profits when you got up into this zone. So anyways, it works for oil as well. Alright, let's go to stockcharts.com and look up the bullish percent indexes, and then wrap this up. The industrials didn't move. The NYA went up, yeah, it went up 0.59%. The transports didn't move. The NASDAQ went down 0.86%. The S&P went up 0.28%. The OEX didn't move, and the NDX didn't move. So another thing with those charts we were just looking at, the um, the bullish percent index will help when you pick those higher absolute bottoms and tops. They will help you start looking for the right trades at the bottoms. Not that you can't use the trades um, on their own, but it helps to use the bullish percent indexes to guide you where the big money is really. Is there more bullishness or bearishness in the overall markets? So, with that, I will leave you guys for tonight. I hope it helps. Hope you got something out of that. If you did, drop us a comment, like our videos on YouTube, and yeah, take care.